Welcome to the second episode of the Academy, guys. So in the previous episode, we talked about how to use the X model on the range chart for our entries, right? The rules behind it. This is another chart that I use for my further confluence when I'm trading, right? So this one here is the vol bar chart, all right? And the settings are set to only identified reversals. So a lot of back testing, a lot of hours went behind this to find the ideal ways and settings that we can use to find reversal areas, okay? So we're gonna go through this template one level at a time, all right? The first thing you will notice here in this video is that you're gonna start seeing these purple lines, all right? And you're gonna start seeing these blue lines. Now, what you will notice in this purple line is that in here, you'll see PE and PC, for example. PE means pressure extreme and PC means pressure control, okay? Think of it as level 1 and level 2, all right? Level 2 being pressure extreme and level 1 being pressure control. Now this line is purple over here. This line is purple and it says P. So this means that there are sellers, because purple in this chart represents sellers, putting pressure to bring the price down. How to use this as is once you see this, you can take a short, a little bit of a FOMO move, right? Once you see this indicator print. Now, the other one that you will also see is something like this one, okay? This is what? This is a dashed or blue cyan line, and it says AE, absorption extreme and absorption controlled, as you can see here. You see AE, absorption extreme, and AC, absorption control. Now, imagine that you're in a long, and then you see this is probably a good indication to get out, okay? And this indicates what? That the buyers are being absorbed. So if buyers are being absorbed, this is bearishness, okay? Because we have a cyan line with AE, so means buyers are getting absorbed. If it was P, that means buyers are putting pressure to push the price up. So how can you use this? Excuse me. Usually I like to wait for price to retrace into one of these levels, reject, and then we use the X model to take our shorts. Range chart, with the sell signal, etc., all that good stuff. Okay, here, another example. Price was going down, then what we saw, absorption of the sellers. Why is the sellers? Because here is a purple line or magenta line, and it says AC and AE. So the sellers are getting absorbed in this area. That indicates bullishness. So how could you play this? You can either long as soon as you see this, which is risky, okay? Or you wait for the retracement like we had over here, okay? And for instance, you see that the sellers got absorbed again here on the 109, and then price moved upwards. Now you will also see this DD or VD, okay? DD means delta divergence, okay? That means one thing. It means that if the candle closes bearish, but the delta of that candle is bullish, then that means a divergence, okay? Here, can we see price came back into this area here, tapped into this area where the sellers got absorbed, and then you started to see 109 a bubble here, sellers getting absorbed, and then again, you have a green delta divergence indicating bullishness for price to go up, okay, so on and so forth. Now let's see if we can find a bullish example of pressure. Here's two perfect examples. Price was going up, then what we saw, a delta divergence bearish. Soon afterwards, we printed a magenta line with the letter P at the beginning, indicating pressure extreme and pressure control of the sellers. That means the sellers are putting pressure to push the price down. And what happened? That's exactly what happened. As price went down, what do we see next? The buyer, when it came into this area here, you can see that the buyers started to push the price upwards over here, as you can see. Once they pushed the price upwards, it printed pressure control and pressure extreme. That means the buyers, because this is a cyan line or a blue line, and there's a P at the beginning of it, that means the buyers are putting pressure for the price to go up. Okay, it's really important that we understand this. Now, let's go over to what happened on Friday. On Friday, once price reached to this level, it printed a pressure control of the sellers. Price then retraced up and started to reject down. You might be wondering, okay, Carmor, how do is this the way to do it? No, is this the way every time I see, I just take a sell? No, we need a little bit more context. So now this is the time where we are going to use the GEX levels, right? And if you're new over here and you want to get the GEX levels, we do provide that for free in our Discord, and you can find the video over here, right there. Now I am going to load the levels that we had that I marked yesterday, plus the levels from GEX or options. So come here, import annotations, and let's grab here. So what happened here? We can see once price came into this area, this yellow area here, in this area we had the RTH point of control from the previous day. At the same time, we had the GEX1 NQ. So remember guys, GEX, you'll see a lot of GEX1 until GEX10. Okay, GEX1 will always be the strongest, GEX2, GEX3, GEX4. Okay, so it's the other way around. So again, using all of this as your confluences. Okay, you see here, all right, perfect, price is coming into, so your first move over here, price is coming to the previous day's RTH point of control here. And then inside this area, we have the GEX1 of NQ. It's a strong end of day GEX level because it's number 1. Then soon afterwards, you had a pressure control from the sellers pushing the price down. Okay, and what happened? The price, this was your confluence. Once price went to the RTH POC, tap the RTH POC, tap the GEX1 NQ, and this was your final confluence for this short, which would be this pressure extreme and pressure control from the sellers. Okay, you could have taken this short going down, a little bit of a hindsight, I know, or you could have just waited. If you were disciplined enough, if you're patient enough, wait for price to come back to this area, at least here, then you would have target this amazing short over here. Okay, and a few more examples. Let's see if we can find a few more examples over here in this chart. Okay, here. This was during market open. What do we have here? The 1-day min from NQ1. All right. So 1-day min, you'll see 1-day min and 1-day max. 1-day min, in theory, is the minimum that the price will have to go before it comes back up. And 1-day max, if you see it in your chart, is the maximum the price will go until it rejects back down. In this area here, we had 1-day min from NQ1. We also had the GEX10 of NQ1, which is the weakest one, right? Price came, rejected, and then what happened next? After price rejected, this area, as you can see, we had the pressure control and pressure extreme printed, and you could have taken the long up. Or if you preferred to wait for the retracement, let's say, oh no, I missed the move, it's too late, be patient. Wait for price to come back down to one of these levels. Don't trade blindly. Trade at your levels for the X model, okay? Trade at levels only. Don't try to trade when price is in the middle with no levels, all right? Now you can see as price went down, it tapped back to the pressure extreme and the 1-day min NQ1. Now, although it closed below it, price still went up, okay? And this will happen time to time. Nothing is 100%. But because we already knew that, okay, the buyers are strong in this area, then there is a GEX level over here, 1-day min, which is very strong, and you could have targeted the long to go higher, okay? And then, let's say, where could my TP be at? You can, if you want to be super objective of where you put your maximum TP, you can use these levels over here, as you can see in this area, where the sellers are resting, and this would have been your TP level. And although the price blew past it, that would be another way. Now, I also want to talk about sometimes you will get a fight. Okay, a fight meaning this: when you have two types of levels here, you can see you have pressure extreme and pressure control of the sellers. They tried really hard to push the price down, but then they got absorbed. As you can see shortly after, we had absorption control and absorption extreme of the sellers. So what does this mean? This means that the sellers were trying to push the price down. The buyers were fighting them, and then the sellers got absorbed in one point. So when this situation appears, this is a breakout play, okay? You need to wait for price to break out both of these areas before you can confirm whether you want to short or whether you want to long. It doesn't mean just because you had the pressure extreme and then you shortly after you see absorption control, you say, okay, the sellers failed to push the price down, the sellers are getting absorbed, I'm gonna go long. No, the best way is to wait for the breakout when this specific situation happens, okay? And that's pretty much it. So again, right? Now I also would like to talk about, so now that we're clear about the pressure levels and absorption levels, as you can see here, here's one more example, right? Sellers were there was a fight going on. Pressure extreme, sellers were trying to push the price down, they failed. But shortly after, we have what? A bearish VDD, volume delta divergence. And then we have VD, which is a volume divergence, okay? And these two are bearish. So it's an early indication that say, okay, something is going on, the buyers are struggling in this area. Shortly after, we have absorption extreme and absorption control, as you can see. That of the buyers. Why? Because this line is cyan and it says AE. I know I keep repeating this a lot, but the thing is, a lot of you guys, a lot of the people are asking me, what does that mean? So I need to emphasize that the color, pay attention to the color of the line and pay attention to the letters of the line, okay? We had volume delta divergence, which is the strongest one. Then we have volume divergence. Then price went down, and then the buyers started to step into this area, delta divergence. But shortly after, we had a signal print saying absorption of the buyers. The price went up, retest, lower, and went down. You will also see in this template the different shades of color. For a long, the brighter the white, the stronger the long is, the darker the color is, the stronger the seller are, okay? So for example, here we have you can see the shades over here. Bearishness, right? You can see the outline of this candle. This is a bearish candle. That's why the outline is purple. The price came up to this area, rejected, and then in this candle, this very next candle here, you see a lot of bearish delta inside the candle, all right? The shades of the candle will give you an indication of how strong the delta is. And in this situation, the pure shaded black, it's saying that there's a lot of selling delta inside this candle, indicating more bearishness, okay? And soon afterwards, you could see the price going lower, all right? So let's recap a little bit. We identified what is the absorption and pressure levels, all right? So pay attention to the color and pay attention to the letters, okay? AE means absorption. And then so if you see a blue line with AE, that means the buyers are getting absorbed. If you see PC and PE in the blue line, that means the buyers are putting the pressure to push the price up. Okay, perfect. Now, the next one I would like to show you is, I don't have a name for this. I call it the C print, okay, or R print, or you want reversal print, okay. We have a bubble with a bar in it, okay. So when you see this is a fantastic indication of a reversal, okay. we need to understand one thing, which is the rocket theory. I call it the rocket theory. The positioning of sell imbalance, big bubbles, big trades, it's really important, okay? For example, if you're trying to short, all right, and then let's say if you're trying to long in this situation, and then you see this, okay, this is a bullish candle with a lot of white in the middle, so that means a lot of bullish delta in this candle. And then you see an 84 at the bottom part of the candle, in this case, the bottom wick of this candle, followed by this bar here. This is a very strong indication for a reversal. How could you play this? You saw that if you see this, you take a and you went for a long, you'd be fine. Or you could even use this as a zone for a retest for a long. For instance, as you can see here, the price came into this area, almost tapped it, and then sure, and then afterwards the price just kept going higher. And you can see another example here, right? And this was a huge fight over here, huge. Okay, we can see the C print, right? Notice how here sellers got absorbed. You see a lot of AE, right? Sellers are getting absorbed in this area. Buyers were also fighting in this area. Let me just zoom in. Let's go line by line. AC and AE, okay? Sellers getting absorbed, okay? This indicates bullishness. The price went up and then you had a print, a C print. Notice how the price came up, retested, rejected down for the price to go lower. And as this whole battle was happening here, the next line showed you again that the sellers were still getting absorbed in this level. Then buyers were starting to push the price upwards, but they couldn't get past the C print. They tried again, pressure control and pressure extreme, to push the price upwards. So remember what I said earlier. When this situation happens, either you wait for a retest of a level, for instance in this situation, or you wait for the breakout. Okay, now the price, they're having this battle, the price taps into the C print, rejects it with this candle here, then we have a little bit of a fight over here, and then the last one, absorption extreme, blue line. So buyers finally failed this battle, and we had an indicator that's telling us that buyers got absorbed in this level. So we got two things, three confirmations here. One would be the C print, two will be the absorption extreme of the buyers, and three, the breakout of this whole mess. The next one we can also see, so here, what can we see? Price came down over here, and what do we see next? We see a delta divergence on this bearish candle with a C print below it. So you can either use this as a retest to go higher, or if you want more confirmation, then you can maybe wait for a pressure level of the buyers or absorption level of the sellers to give you an indication to go higher. So if you did not take it as it was and you waited, what could have you done? You see pressure control and pressure extreme. You could have waited for the price to come back to this level over here to take the long. Now, imagine you took the long here, right? And as you were in this long, you had to be careful over here. You saw this pressure of the sellers to push the price down, and shortly afterwards, when it printed, the price went down, tapping back into this area here where the pressure of the buyers were sitting at. And once it rejected, the price went up, came to the pressure extreme, rejected back down. So now you have another breakout play. You're ping-ponging between these levels, okay? And say you were in this long and you did not know what to do, and you're a little bit anxious because of this. But then when you saw the pressure control and pressure extreme from the buyers printed, that means the buyers are pushing the price up because the line is blue and it's a P, then you can have a little bit more peace of mind that, okay, there's a long opportunity for your trade to be successful. Until where? Say you went into this long, price came back up, look where it tapped again. You see this dash line? It's a cyan dash line, and it's an AC. So that means what? Buyers got absorbed in this area. So where buyers got absorbed, sellers will protect. Remember, where sellers got absorbed, buyers will protect. Okay, so as the price went up, rejected, closed bearishness. Okay, then what happens next? It gave you an indication here before the price went there. It told you that sellers got absorbed in this area, and it also told you that the buyers are absorbed in this area. So imagine you took the short here, then you would need to wait for prices to break out from this level. Okay, and that's how I use this also as a confluence with my trades. And obviously I pair it together with the options level and GEX spot that I stream every day. This area also, not only that we had a pressure control of the sellers here, you can see from this line, we were also at the RTH POC, we were also at the GEX1 NQ, and on the GEX1, the live options market, this was a major gamma level. So this had everything for telling us, okay, this is a strong area. Buyers will probably struggle in this spot. Okay. Now I also want to show you one cool feature is that this template will also send you an alert every time it prints a new absorption level or a pressure level. So you can see here, let's just click this one time for you to see. You'll probably see a notification pop up. So imagine you were in a trade, right, and you have this at the side of your screen. There you go. And as you can see, it does show you. So I hope you enjoyed this video. I'll catch you in the next one. And please subscribe to our YouTube channel, support us. This template is free. You can always reach out to me if you have any further questions regarding this, and welcome to the Academy.